All right, welcome back to Market Day Report. I'm Scott Shellady, otherwise known as the Cow Guy. Thank you very much for tuning us in. Why don't we take a look at these markets, because that's really what you want to know. We've been all over the place today. It's been kind of a wild one. Let's take a look at corn. Bringing it out from behind my fat head there, we can see what we've got going on, and it's a lower board by about, say, on average, 4 cents. We've got the July down 1 3/4 cents to 638.5. But as we go out to the D's, it's about 3 3/4 cents lower to 593 3/4. So we've had a decent range, but still, we're off today between, say, basically 3 and 4 cents across the board. Let's talk about soybeans and see what we've got going on there. Soybeans, well, August is unchanged up front. 1407.5 was last. We do see that July is up 8 3/4. That's tight. 1475 1/4 there. But then all the backs are lower. Let's go to Nove. That's off by 3 1/4 cents to 1339 even. So that'll give you a little bit of a feeling about what we've got going on right now on the beans. Let's move over to Chicago wheat. See what that's got in store for us. And we're up a tad, right? We've steps up 1/4. That's one tick. 701 3/4 is last. If we go to the D's, it's up 1 3/4 to 717.5. So that market's up between, it's basically unchanged to 2.5 cents better across the board. We gain a little bit as we go out the deferreds, but that's a good representation about what's been happening there. How about Kansas City? Let's see what that's got going for us here. We're off about a nickel across the board. Say steps off 5.5 cents, 833.5 last there. While the D's is off 4 3/4. No, D's just jumped a little lower. 5.5 cents lower there to 831.5. So we're off about 5.5 cents across the board when we come to Kansas City hard red. All right, let's move out to the Minneapolis spring wheat. And that's off about 9 cents. 8.5 cents lower in the July at 845 even. Go out to the deferreds, that would be D's, 9 3/4 cents lower there at 850.5. So we're off between 8.5 and 9.5 cents when it comes to spring wheat in Minneapolis. And then finally, let's get to the cotton. That's we got what? D's is up 63 points there to 80, spot 73. All right, let's get to our next guest analyst. That would be Mr. Tommy Grisafi. He's coming to us from Valparaiso, Indiana. Tommy, thanks for being on the show, brother. It looks like you got up early and got dressed very well for kind of a volatile day. What are your thoughts here? You've seen the overnight ranges. We've had some big ranges, but we're really kind of hanging around pretty close to home.
Yeah, well, I thought about what you were going to ask me. I thought this subject would come up. Buyers and sellers are agreeing on price, and people who truly understand markets. I had a client call me today. I said, wow, corn just went up 5 cents. He said, were there more buyers than sellers? And I said, actually, there's always an equal amount at every single price. That's what makes the exchange go around. Now, it's how much and how bad someone wants to buy it and how bad someone wants to sell it. And that's what creates prices to move up and down. That's what creates volatility. Think of volatility like water. Water could be frozen. That's ice, low volatility. It could be water. It could be steam. All three could mess you up depending on how they hit you in the face. But we're at extreme volatility. $6 was a key level. We traded 5,000 futures on the first print, on the opening print last night at 7 o'clock. So buyers and sellers really got excited. And we've been doing that. We've traded up, down again. And I'll tell you, Scott, in my opinion, we went up a little too far, too fast. If rains start to show up, you're going to wish you bought puts when you can, not when you have to. No, if it was easy, weathermen wouldn't have jobs. You know, people, everyone would be a trader at the Chicago Board of Trade. But I will say this: there's a tremendous opportunity to protect crops. I'm not as excited about protecting 23 as I've moved over to 24.
Good
On
point.
Thursday, Friday, and Monday, I protected hundreds and hundreds of futures. My little brokerage group at Advanced Trading protected millions of bushels for 24 because we do not have a crop insurance level for 24, and we are not having a drought in 24. But if commodities continue to go down, like you look at gold, silver, the strong dollar, there's some real weakness across the board in the stock market today. If we weren't having a drought, grains would be a lot lower today. Back to you, my friend.
Yeah, I mean that's a great point, and to that point, I'd add to the fact that other countries have had big crops, and though that's put pressure on us as well, so we're not as competitive as we would like to be. We've also got issues with our demand because of those other more competitive prices. So lots to unwrap there, and you're right. When the buyers and sellers are kind of agreeing that right now the price is pretty much right at unchanged or around that level, it'll be interesting to see how things go forward. I'm going to ask you a question when we come back, but I'll tell you what it's going to be about. But when your producers...
Can you tell me the answer before we go on break?
Yeah, right. When your producers call, I want to talk to you about what you say to them about what they should be doing with their crops now. All right, we're going to go away. We're going to pay some bills. We're going to come back and talk more with Tommy Grisafi. He's with Advanced Trading in Valparaiso, Indiana. We'll be right back. All right, welcome back. Let's take a look at what we've got going on our four-legged friends. Let's talk about the livestock, the proteins, the meats, whatever you want to call them. We just care about the price. Let's take a look at live cattle, but that live cattle board in Chicago, and that's got us lower here. August is off $1.25, or $1.22 actually. 170 spot 50s last there. You go out to the D, that's another 92-cent loss out there. 178.17. So we're off about $1 to $1.25 across the board when we talk about live cattle. What do we have going on in the feeders? That'll be something that we want to take a look at. And I can say right now with a fair degree of confidence, we're off about $1.30 across the board. Except for August up front, that's off $1.45 to $233.47. All the other months are off $1.30 each. We'll go out to the Nove, that's off $1.30 to $2.40 even is last there, okay? So that'll give you an idea, about $1.30 lower when we talk about feeders. And then finally, let's take a look at lean hogs. They've been stronger as of late, and they still are. August is up $1.20 there to $91.87. And you've got some gains going out the deferreds. Even Deese is up 90 cents, 76.85. All right, let's get back to our guest analyst. That would be Tommy Grisafi. Tommy, I asked you before we went away, look, $6 was a place that a lot of folks would have been dying for 2 or 3 weeks ago. Now that we're there, what do you tell them?
Absolutely. Well, first I want to go back. You asked what we're telling clients, what we're texting out to clients and subscribers.
Yeah.
There's 72 hours till July options expire. Today's already Tuesday. This week's going to move Jimmy John's fast. We got Tuesday. We have crop ratings today. Wednesday, Thursday, Friday, July options expire. We are going to be incredibly volatile. Is all that premium bought and sold, and people who thought there's no way we'll ever go there? Literally 2 weeks ago, a July $15 call was almost free. I sold some last night for a client who owned some for 15 cents. Second of all, what are we telling clients? They're very grateful for the mistakes they've made. The market cleaned up. Usually we say discipline wins championships. In this instance, drought wins championships. The drought bailed out the farmer holding the old crop. We are rolling out of July. If you think we are in the mother of all droughts, and this is 2012 all over, CEP and Deese is still very affordable. CEP corn and Deese corn and November beans will continue to perform. Last but not least, if exports were poor at $5, they're not going to get any better at $6. God forbid we go to $7 corn. It could be really, really bearish long term for demand destruction.
I agree.
To you, my friend.
Got to be careful, all right? And by the way, I would have thought that 1988 was a bigger drought than 2012, but you weren't around back then. But I was.
You were the only one alive back then.
I'm an old man. All right. All right, Tommy, thanks for that. Tommy's with Advanced Trading. He's in Valparaiso, Indiana. We'll bring it back here to Nashville. But